I'm going to share, so you just let me know if you can see the screen. We're good?
We can. Yes,
Okay.
all good.
Okay. So a little bit about us. Like I said, we are the Housing Development Fund. We have been around since about 1989. Since then, we've kind of developed into different areas of programs. We are a community development financial institution, so CDFI, as well as a HUD-approved lending and counseling agency. We do have two different parts to us. We are first and foremost a HUD-approved counseling agency. So we provide not only counseling, but also education. And so we do hold the classes, these 6 to 8 hour classes, as well as landlord training for any first-time homebuyers who need to complete it. They don't need to be a client of ours in order to attend the classes. And then we also do individual counseling sessions for each of our borrowers, as well as anybody who is looking to just see if they are mortgage ready. During that counseling session, they'll do kind of a mortgage ready assessment, as well as an eligibility for which programs they are eligible for. And then secondly, we also do lending. So we offer a number of different down payment and closing cost assistance programs that I will go through for you in a moment. So first, I just want to touch on the fact that we are a CDFI. We're not a typical lender. We're not like the other banks. We are a CDFI, and that's basically just a bank with a mission. What a CDFI wants to do, they're dedicated to delivering responsible and affordable lending to disinvested people and communities to join the economic mainstream. Because of this, we are able to give these low cost down payment and closing cost assistance loans and remain and not have to be competitive with bank rates. So you'll see all of our interest rates are a lot lower than what a typical bank rate would be. So our core programs, again, we have the homebuyer counseling, the residential lending, and commercial lending. Our commercial lending is more of a outlet for small developers. So people who are looking to rehab single family homes into multifamily homes or develop small complexes, 2 to 3 homes. This is really where we help with mixed use housing and helping people to create more affordable housing throughout the state. So how can HDF help? We can increase your leads and sales. You can close more deals. What a lot of our programs are able to be layered and stacked, allowing for more buying power for your borrowers. Knowledge of HDF assistance can give you an extra edge if you are knowledgeable of our programs that can help you to finance deals a little easier. And also build trust and become a strong referral pipeline. HDF first-time home buyers a lot of times are repeat borrowers, or they do have family members who come to us. Our greatest thing is word of mouth, our marketing tool. So we always kind of make those relationships with our borrowers. So I'm going to go through the programs that we currently have available in Connecticut. We do service all of Connecticut and New York. I'm going to focus on Connecticut. We currently have our Smart Move Connecticut. That is our main program for down payment assistance as well as closing costs. Sorry, that's not listed there. It is up to 25% of the purchase price. This one is a second mortgage, and this is the only one that has a requirement of a lien position of second to be in second. It's a 20-year term at a 3% interest rate with a monthly payment. And there is a closing cost associated with this. Really, the eligibility factors are income and first-time home buyer. So these are income limits. These are household income limits, and they are done by county. Recently, New Haven County was split into 2 different sections. That's why you'll see New Haven Meriden as well as Waterbury Shelton. They're 2 different sections. The point of our counseling, and we require everybody to go through counseling, our counselors will allow the borrower, will tell the borrower exactly what they're eligible for. So they will know which programs they're eligible for when they get there. But these are the income limits per county. And these are the towns in the different New Haven County areas that are split. This is available. It's available on our website, and I'll share it with Dana too if she would like to circulate this presentation. So our eligibility requirements, really, we require our borrowers to be a first-time home buyer. That meaning that they have not owned or received any benefits of owning a property in the last 3 years. They have to purchase within the state, and they must be within the income limits, and the property must be owner occupied. This can't be used for any investment properties or anything like that. They must complete a one-on-one counseling with HDF or an approved partner agency. And the first mortgage must be with a Smart Move participating lender, such as CMG. We also have a Live Where You Work program, and this can be used as well for down payment and closing cost assistance. This is up to $25,000. This one is different because it's a 0% interest rate. There's no monthly mortgage payment on this. They do have to pay it back. It is a loan, not a grant, but it is only due when the property is sold or refinanced, if there's a transfer of title or a payoff of the first mortgage at the end of 30 years. This is one of those that can really help your borrower to increase their purchasing power, as it doesn't affect DTI at all. They must work in the town where they are going to purchase. It does not have to be full-time work. It can be part-time work. They just have to have held that part-time position for at least a year. And it only has to be one of the borrowers. So if there are multiple borrowers on the property, only one of them has to work in that town. Our third program is our HDF Homeownership Equity Fund. This is up to $20,000 as well for down payment and or closing cost assistance. This is a 0% interest loan for 30 years, so same terms, and another way to stack those loans to layer them to allow for more purchasing power without affecting the DTI. For this program, the borrower must identify, or co-borrower must identify as Hispanic or Latino, Asian, American Indian, or Alaskan Native, Black or African American, Native Hawaiian, or other Pacific Islander per the HMDA requirements. Other than that, they would just have to meet the same income requirements as the Smart Move. And then I also want to touch base on a new program that we have. This is called the CT Forever Home. This is for down payment only. No closing costs can be financed with this one. It's up to $28,000. This is a 30-year term at a 1% interest rate. So this one does have a monthly payment along with the Smart Move. But this is at 1% interest rate, which is clearly far below interest rates at the time. The caveat with this one is that the borrower must agree to a 10-year affordability period. So there will be a deed restriction put on the home for 10 years. If they were to sell the home within those 10 years, prior to the 10 years being over, they would have to agree to sell it at a price to keep it affordable for the next borrower. And the next borrower would have to be deemed affordable, being under 80% AMI. If they stay in the home for 10 years, after that 10 years, the deed restriction comes off and they can then sell it at market rate. The best way to get your clients started, the good thing about HDF is that there's no requirements. There's no requirement for the borrower to use our lending programs if they go through counseling. The counseling is free of charge. The only thing that they are going to purchase is a credit report, and that's a soft pull credit report, so it's not going to affect their credit score. So even if they're just kind of thinking about purchasing, they don't know if they'll qualify or anything, they can get started with counseling, because that's the first step. And then this way they'll know if they're eligible. If they are and they don't want to use our programs, there's no requirement. They can just go along. But if they do want to use our programs and they are already halfway through being approved. So the easiest way to do that is to have them start on our website. And that is our website there, hdfconnects.org. They would click Start Your Journey here, and that would click them over to the portal where they can sign up to be a client of ours. If they have any specific questions, they're more than welcome to email myself, which will be on here, or first-time homebuyers at hdfconnects.org. Some people have, if there's any issues with actually getting started with the application online or unable to upload documentation, then they would email first-time homebuyers at hdfconnects.org. This will be circulated, but these are the program links on our website. And this way you get all the updated, our income limits do change every year and everything's always updated on our website for you. And then there's my personal contact information as well. And like I said, I'll pass this along to Dana and she can distribute so that you guys all have it for you to reference. And if there's any questions, you guys can always feel free to give me a call or email me and let me know. I'm happy to help on a one-off. Every client is different. So if you have any questions about somebody's eligibility or anything, happy to answer. But if there's any questions on anything I said, I know I talk fast, so I'm going to give everybody a breather and just let me know. I'm happy to answer any questions you have or anything.
Okay, do we have any questions from the audience? What do you think? What would you
Have
guys
any of
like
you
to
heard of
know about the
HDF?
program?
Sorry.
Oh, it's okay.
No.
Everybody's quiet.
I know. It's been a long day for all, I'm sure.
Absolutely. All right. Well, maybe what I could do is if I could just, if you would like, I can show a quick example of what a $400,000 purchase might look like if we utilize this program to show like what the stacking effect looks like for people. Do you, can I share my screen and then maybe you can talk us through this one, Jackie? Would that be
Sure,
okay?
no problem.
I'll put you on the spot.
Thanks.
Okay. Okay. Can you see my screen?
Yep, I got it.
Okay,
So
perfect.
yeah, so this
Yes.
is obviously for a purchase for a single family home. Dana's broken it down here where the purchase price is $400,000. Our requirement is only 1% down, which would be 4,000.
That's right. Let me fix that.
Sure.
There we go.
So that's our requirement. The borrower is able to put down as much as they want, but we require a minimum of 1% on it. So the live where you work, with closing costs, they can get up to $25,000 there. The CHAPA time to own is up to 25 as well, correct? They haven't changed that.
Yes.
Okay.
Yes, that's
So it
right.
remains, so if they were to get, now live where you work is a 0% interest, so nothing adds. CHAPA time to own
Nothing monthly.
is a forgivable grant. And then the equity loan for 20,000, also at 0%, so no monthly payment. Then they would get a smart move for 25% of the purchase price, at a 3% over 20 years. And then a CHAPA first. So the 80%, well, it would be less than that, but their first mortgage would be at 6.75
This is
currently.
wrong too, because I just changed it. First it was 7 and then CHAPA
Did
went
they
down to
update?
6.875 and today they're at 6.875. So I actually updated this number. So this is correct. I just forgot to change my label there. Thank you.
No problem. So all in all, they're getting basically 20. So let's look at it this way. With taxes and insurance, their monthly payment would be $27.44. With this breakdown, they've gotten 45. What is that? $70,000 at 0% interest.
Yes.
And so that added $70,000 worth of income basically to them that they could adjust their purchase price for. And of that, they're getting another $10,000 that can be used for closing cost assistance there. So coming to closing with minimal, as well as being able to finance at 0% is really helping the purchasing power.
So then the other requirements are from the realtor standpoint, this is very important, is we see a lot of offers come through today and we see because there's very often a competitive situation with lots of buyers for just a few homes, we see the inspections getting waived a lot. But with this program, we have to have the buyer has to have a home inspection, right? So can you talk about that?
Yeah, so we do require a full home inspection on the purchase property. We only require the actual building inspection, so any additional inspections are up to the borrower. We will review it. We do look for any safety and soundness issues, anything that's going to prevent the borrower from living safely in the home, such as asbestos, mold, lead paint, structural issues. We're not going to focus on, GCFIs, electric, things like that. Any major issues that could cause them hardship, either safety issues or a hardship of repair. So like a roof or anything like that, that would really make it difficult for them to continue to be a first-time home buyer within the first year of owning the home. We do not require any repairs to be made prior to closing. We wouldn't have somebody repair a home that they don't own yet. And so we do require escrows. We would have an estimate by a licensed contractor and then have the attorney hold the funds in escrow. So they would be able to, they would be required to have those funds to be put in escrow for any major repairs.
That's perfect. So in that sense, it would be viable maybe as like a real estate purchase to, you can still waive the home inspection or just make the home inspection, not waive the home inspection, but I mean like make it contingent, make it where it's for buyer's information only and then subject to any lender requirements, at which point it becomes basically part of the
Right.
mortgage contingency, right?
Correct.
Okay, perfect. Okay, and then so the other thing I was just wanted to sort of to highlight like what the financial benefit to potential home buyers is of having this program. So I was just gonna like just click here like, okay, what happens if, we no longer have live where you work? If we, if we just kept time to own and, got rid of this and got rid of this, our monthly payment already went up like almost $300 a month. Plus, I'd have to add at least $100, if not more, for mortgage insurance. So it's, in terms of the monthly payment, it's almost $400 a month in this scenario, right?
Yeah, so you've not only increased purchasing power, but you're also helping the borrower to remain affordable.
Yep. And then the other nice thing is the fact that the HDF Smart Moves loan is only for 20 years. So, that's 10 years of payments that you don't need to make, right? Here we go. We have someone joining us now. Hello, Michael. Good evening. Welcome.
Good evening and apologies. I got back very late. So if you guys are still
That's
going,
okay.
please. Thank you.
We are. So, Michael, we recorded the presentation, so we'll send it to you later so you can catch what you missed. But let
Excellent.
me introduce you to Jackie Alves, who's the director of the Housing and Development Fund.
Hello, Jackie.
Hi, Michael. Good evening.
Good evening.
Yeah, so we were just going through a deal structure of what a $400,000 purchase might look like, and we're just saying that with the Housing Development Fund, low cost funding, or in some cases like it's not that it's no cost funding because it does have to be paid back, but there's no monthly payment on certain pieces of the loan. And so because of that, it could save the borrowers like $300 to $400 a month in some cases because there's no mortgage insurance. And then the fact that there's basically, in this scenario that we've created, almost $70,000 or approximately $70,000 with no monthly payment. So, that helps a lot.
Also, I mean, without this, you have to restructure it then at this point. Most programs require 3, 5, 10% down where we only require 1, as well as closing costs. And so while we're only requiring 1% and covering a lot of closing costs with the closing cost assistance, that's less out of pocket for your borrower as well.
Very good. Okay.
Sorry, the closing cost assistance, is that only where you live, where you work type, or is that anywhere they're able to purchase?
No, so all of the loan programs, yeah, that are listed here. So we have 4 programs currently. 3 of them allow for closing cost assistance and down payment assistance. So it's allotted, however, is needed for down payment and then the remainder for closing cost assistance.
Are there any income restrictions?
Yes, so they all have income restrictions. The map is, do I still have it open? See if
Oh
I
yeah,
can
let me
share.
stop sharing
Sorry.
so you can go back. It's okay.
Let me open it up and show you. Yeah, so we do, they do have to be income eligible and a first-time home buyer. Those are the 2 eligibility requirements. And then we have.
What are the ranges? I'm sorry. Is there like a
I'm going to
range?
share right now.
Okay, got it. I'm getting ahead of myself. Sorry.
No worries. Okay, so this is the Connecticut map. It is done by county, and it is household income. So this is
Excellent.
everybody over the age of 18 that'll be living in the home.
Okay. Now, so this is only for Connecticut, correct?
No, we also have it in New York. So the there's only this one program, Smart Move, is available in New York. That's our only New York loan. The remainder of our other loans are all in Connecticut.
Got it. Now, if I have somebody that lives in New York and wants to purchase a property in Connecticut because they're moving down here, are they
Mhm.
able to do the
Yes.
program? Does it have to be through New York or can it be through you guys?
No, it would be through us.
Through you. Okay. And what would
Yeah.
be the requirements then for that person? So they would have to move then to Connecticut and prove because they're living there now and they would like to purchase, a house in Connecticut to move out here. So how would that look like, I guess? Can you walk me through that?
So it doesn't matter. We don't care where they live now, as long as the home that they're purchasing is in Connecticut.
Excellent. Okay. I actually have a client, so that's what I was asking.
So Michael, the one thing there that you would just want to be cognizant of is, we were in the example that I showed on my screen before, we were showing the stacking of different loans together. And so if the people haven't been Connecticut residents for the last 3 years, then they wouldn't be able to access the CHFA time to own program, which is allowed to be paired with the Housing Development Fund loans. So that means they would lose, the $25,000 there. But there is a CHFA.
But any of HDF's loans, they would be eligible for. Just not Chalfa.
Now, are there specific banks that you guys have to work with? Is there like a list of those banks?
Yeah, they're available on our website, and the website is in the presentation that Dana's going to circulate for you as well. It's hdfconnects.org, and then all of our participating lenders are listed.
Okay, copy that. Thank you.
Okay, great.
All good.
All right, team. Any other questions? Any other things that you'd like to cover? Going once? Going twice?
I
Okay.
spoke very quickly, so if there's any questions afterwards, feel free to reach out.
Okay. Jackie, it was a pleasure to have you with us. It's an honor to have you. Thank you so much for everything that you do and all the work that you do to promote homeownership. This is wonderful. It's a great program to have. We're very lucky to have this. So thank you very much. And thank you to everyone for joining.
Hi,
All right,
thank you.
thank you.
Thank you.
All right,
Have a good night.
you too. Thank you.
Can you give me a call after? Thank you.